Hi everyone, here's a quick update on the major markets, the US dollar, oil and gold, to help you stay on top of the latest trends. So starting with the US dollar. The minutes from the Fed's June meeting showed that only a few officials supported cutting rates as early as this month, while most remained concerned about the inflationary pressures from the ongoing tariff war. And meanwhile, President Trump once again called for a sharp and immediate rate cut and even urged the Fed Chair Powell to resign. However, the markets have largely become numbed to Trump's repeated calls, and traders had little reactions to these comments or to the June's meeting. And investors still see the September as the most likely timing for a rate cut, with a further move possibly in December. Until more concrete economic data emerge to measure the impact of tariffs, the US dollar is expected to remain range-bound and lack strong breakout momentum during this period of uncertainty. And next, WTI crude oil. The prices held steady on Wednesday, hovering near a two-week high. And last Saturday, OPEC agreed to increase the oil production by 548,000 barrels per day in August, up from 411,000 in the previous months. Despite this supply boost and an expected rise in the US crude inventories, the oil prices have shown surprising resilience. And this strength is mainly driven by strong seasonal demand as the US peak driving season continues to boost gasoline consumption and support overall oil demand. And additionally, investors appear less worried about the impact of Trump's trade tariffs, easing concerns over potential demand shocks and helping to stabilize the oil prices. And lastly, gold. After an extraordinary first half of the year, gold has entered a consolidation phase, trading sideways for the past 12 weeks, while silver has started to catch up. While both gold and silver up around 26% year to date, some investors wonder if the rally can continue. However, the key drivers for precious metals remain solid: sustained central bank demand, the risk of US stagflation, ongoing geopolitical tensions, sanctions, trade frictions, and growing fiscal concerns. And portfolio rebalancing by sovereign wealth funds and institutional investors, along with a weaker US dollar, further supports the gold demand. And overall, I remain optimistic about gold and other precious metals heading into the second half of this year. So that's it for today's market snapshot. Stay tuned and trade wisely.